Tesla shares rebounding today after a 5-day slide. The stock has fallen over 30% from a record high it hit back in December. So what's next for Tesla? CEO Elon Musk puts a lot of his time into the Department of Government Efficiency. Here to discuss, we've got the Nancy Tangler, the CEO and CIO at Laffer Tangler Investments. Nancy, always a joy to speak with you, and I'm excited to talk to you about Tesla because it's been interesting seeing some of the sales data, particularly out of Europe, that's been under pressure for Tesla. And I wonder if you are rethinking any risk to Tesla that is associated with having an executive like Elon Musk at the top, or do you think that that data coming out of Europe, that soft sales data, is something else?
Well, thanks for having me, Madison. I think a couple of things. If you go back and look at Tesla since the IPO, the stock is up on an annualized basis about 49% annually. And that's about a 33,000% total return, cumulative return since then. But during that period, the stock has been in a bear market 42% of the time. And so if you look back and say, when has it made sense to buy the stock? It was when Elon Musk was sleeping on the factory floor. It was when he was selling shares to buy Twitter. And I think this will again be a time when you say, it made sense to step in and add to holdings. We trimmed early this year. We wanted to wait for a new tax year because we had such large gains in the stock. And I think, if it continues to show weakness, we'll be buying. And the last thing I'll say is the reason for that is we do not think this is an EV company anymore. We think it's an energy company. So battery storage grew over 100% last quarter, over 50% the previous quarter. We think that it's an AI company. So full self-driving in the US is likely to be a reality soon enough. He's saying middle of the year, which probably means end of the year. But we think you want to own this stock for the long term and use the volatility to step in and buy at more attractive levels.
Nancy, at what level is it a buy?
Hi, Shauna. So I think, look, this is not a company that trades on valuation. It's a company that trades on the story. So if you believe in the AI story and you get a pullback of 30 to 40%, then I think you add to holdings and you just have to be disciplined. So I would say here is an opportunity to add to holdings. If we get additional pullback, I would say that would be an opportunity to add to holdings. We have not thought this was an EV company for over a year because what Elon did with EVs was he cut his own margins to drive his competitors out of business. He did a pretty good job of it in the US with Ford kind of struggling in the EV space. And so we expect to see margins improve. We expect to see the cheaper model. Cybercab is likely on the horizon. And then of course, my home healthcare solution for my old age is Optimus, the robot. And I think that is being underestimated in the valuation.
Well, let's talk about another company digging in on robotics, and that is Meta. Nancy, I know that you trimmed your holdings in Meta. Talk to me about how you're thinking about the stock today. What is your concern with it? What are the opportunities you're looking into?
So Madison, as a portfolio manager, you live in a perpetual state of dissatisfaction. We actually sold our holdings in Meta, and that was probably at levels about 50% below current, but we bought Spotify, and Spotify's up significantly more than Meta during that period. So I don't have too much to say about it. I think Mark Zuckerberg has pivoted in the right ways. He cut costs. He's, expanding the company's focus. We'll see from an AI standpoint where they end up, but I think they're a survivor in the space. They've committed to and increased their CapEx spending. We saw that from all the hyperscalers. They either doubled down on their current levels or increased spending. Amazon and Meta both did. So I do think we're early innings in AI spend. I don't think DeepSeek has changed that for the worse. I think what it's done is increased competition. And that's always, as we've seen historically, Jevons paradox, it's always good when competition drives down prices because it drives up demand.
Nancy, let's talk about the bet and the position that you do have in Spotify. Clearly, it's been one that has paid off. Just similar in using an analogy that you just used with Meta, are we still in the early innings of Spotify?
think so, Shauna. So what last year was the year of monetization, and they did indeed deliver earnings. This year is the year, I'm quoting Daniel Ek, the CEO, this year is the year of acceleration. And we think that this stock is also a recession-proof name, much like Netflix. So, at the margin, some people will cancel their subscriptions, but we don't see that. And they've done a really good job of using AI and also opening up the platform for Joe Rogan, among others. And that's increased their advertising revenues, and they are using AI to really drive advertising. So I think you want to own this name for the long term. It's not cheap. So if you're valuation sensitive, you might want to wait and add on weakness, but it is a member of our 12 best ideas portfolio, and we really like our position in it.
Nancy, I want to zoom out just a bit and get your take on how any policies to come from this administration could impact a slew of your investments. I know one of the things you mentioned in your notes is the amount of money that the government spends in IT and tech annually, and some of the stocks that you cover here are beneficiaries of that IT spend. Should investors be concerned about the Department of Government Efficiency maybe becoming too efficient and raking in some of that spending?
That's a great question. I don't think so. I think at the margin where we're going to see spending, and we've seen it with Palantir, is that the government is going to really focus on spending efficiently, which means productivity improving technologies, and those are many of the names that we own. If they are cutting jobs, then they need people to be more productive, and I think that is what we will see. I had a friend who just recently applied for Social Security. It took 3 months to get approved, and multiple iterations, long periods of silence, back and forth. And I think that's what we're talking about. Like, that should be an online application, which, by the way, it is, but then you have to go through a manual process. So I do think that that's going to be an area that will benefit many of the names like ServiceNow. We don't actually own Palantir. We missed that one, but like Palantir, we're certainly looking for an opportunity to get in. And then many of the infrastructure names like NVIDIA and among others, Broadcom.
Nancy, I'm curious how you're looking at a name like Intel, and I bring that up just given the gains that we saw, some of the excitement on the heels of the commentary from Vice President Vance, just in terms of the Trump administration's commitment to manufacturing so much of the advanced AI technology here in the U.S. Is there an opportunity ahead for Intel, and could this be a good buying opportunity here for this stock?
Shauna, Intel we're not in the stock. We got out about 2 or 3 years ago. It was clear to us that Pat Gelsinger wasn't going to be able to turn the company around. Whenever you get government subsidies, which is what he did, he went hat in hand to Washington to get subsidies to manufacture in the U.S., and many of those plants are being built here in Arizona. But it reminds me a lot of Xerox. So yeah, Xerox developed the mouse, but they did not monetize the mouse. That was Microsoft, among others. So I just worry that this company is so far behind. Can you make money on a trade? I think you can. Can you make money for the long term? I don't think so. And I think you're not getting paid to wait anymore via the dividend. So it's one, we just think there's better places to be.
All right, Nancy, thanks so much for joining us this morning. Always appreciate it.
Thanks so much for having me.